Hi guys, it's Linton here. So I just wanted to give you a quick update on the Nasdaq and what it is that we're looking at. Um, there's a couple of important news events happening over the next couple of days, but the most important being tomorrow's the CPI release. So let's get into it and have a look at what's going on. The first thing that I want to draw your attention to is that we are still trading inside this, what looks like could be a pennant setup, which would mean that we've got an impulse, a corrective structure, and then we're waiting for the second impulse, which would actually take us up to this trend line that I've been watching for some time. It's not granted that this is definitely going to be a bullish breakout, and I believe that price is just going to hover around here till tomorrow, um, until we get the CPI release, which is going to tell us whether we're doing better with inflation or not in the States. If inflation is still rising, we will see a pull-off in the indexes in the stock markets. If inflation has peaked and the Fed is taking effect, we are going to see a rally on the indexes and on the stock market. So not much to say after the last video that I created, but what I want to draw your attention to is a couple of developments on. We've got the dollar index and the US 10-year that I want to have a look at quickly. So let's check that out. First, we're going to start with the dollar index. Now, as we know, the stronger the dollar, there's an inverse correlation with indexes in the stock market. So should the dollar rally, in other words, if the dollar keeps going up like it is at the moment, we will see the stock market come off, which obviously means that indexes will come off. However, I'm seeing a development here that could be a bearish flag. So we could be seeing the formation of a bearish flag over here, which means that we've got an impulse, a corrective structure, and an impulse. And that impulse takes us right down to the level that I've been expecting for a while, which is the 100 mark on the dollar index. So that would tie in quite nicely. If we do see a pull-off on the dollar index, we will see the prices rise on the indexes and in the stock market. So that would be very good for the market as a whole. The other instrument that I want to have a look at quickly, and just bear in mind, guys, like I said, this isn't a given. This is just what I'm observing at this point in time. It doesn't mean that we're not going to see this rally even further on the dollar if inflation hasn't peaked, which is likely. And if that does happen, we could see price trade back up to these highs on the dollar index, and we will see a pull-off on the stock market. But that said, let's have a look at what the US 10-year is telling us as well. Now, the US 10-year is what you keep your eyes on in terms of yields. So the higher the yield, the more attractive it is to investors to have their money there. So it's important to keep your eye on the US 10-year to see whether or not it's more attractive to investors than the stock market. And at this point in time, guys are really pushing into this US 10-year. Now, bear in mind, we are looking at a very big time frame here. This is the monthly time frame. And I've done that for a reason. I'm going to show you now why. So we've had this very strong rally over the last couple of years on the US 10-year, and that is now having a big effect on the stock market and why we're seeing this big correction take place. But the thing that I want to draw your attention to that I find very interesting is that every single time we've seen a rally on the US 10-year and we've gotten to these kind of overbought territories on the indicators that I use, we've seen significant pullbacks on the US 10-year, and they have marked bottoms in the stock market. So if you correlate these points, you will see there, you will see there, you will see there, you will see there, and this is exactly where we are at now. And the other important thing is this range over here is something that has been tested a number of times and has held. So we tested it here, we tested it here, and we entered that zone, and we're finding resistance there. Whether or not this will prove to be a big pullback on the US 10-year and a rise in the stock market and the indexes remains to be seen. But it is very seldom that we see these kind of levels on the US 10-year without there being some kind of pullback first. And obviously, if money flows out of these bonds, it'll flow back into the stock market. Guys, I hope that helps you with your analysis. I'm waiting for the CPI release tomorrow to see which way this is going to break. So to see which way this is going to break over here, I believe that tomorrow's CPI result will tell us whether we're going to go up to that trend line or whether we're going to go and test these lows again. And at that level, see what happens. If you enjoyed this content and you found it useful, please give this video a thumbs up. And I'll catch you tomorrow with the CPI. Cheers.